Good morning, and today is Friday, October the 14th. The time right now in Singapore is 11:08 in the morning, and boy, we have a massive move last night in US equity markets. Okay, basically the whole world was waiting for the release of the CPI numbers leading into yesterday's night trading session. The market expectation for a rise in headline CPI at 8.1%, and the number came in less than that. The market release was 8.2%. Basically just slightly lower than the previous month of 8.3%. So that was a major disappointment. But what really kicked the market was the core inflation actually went up to 6.6%, which is the highest we have seen this year. So obviously, as far as the Federal Reserve is concerned, the months of very aggressive rate hike doesn't seem to be working because the core CPI continue to edge higher. So that means the market now expect come November the 1st and 2nd, when the FOMC meeting will next be convened, that the Federal Reserve is going to hike at a minimum 75 basis point, and maybe even as much as 100 basis points. So the immediate reaction upon the release of the CPI numbers was a massive sell-off in a very fast-moving market. And for the first time this year, so for the first time in 2 weeks, we can see that the Dow Jones Industrial Average actually took out the September low. Okay, but briefly, shortly after taking out that September low, which was at 28,715, okay, the market actually reversed. Okay, you see the low traded was 28,660, which is the new low for the year. Okay, but shortly thereafter, the market decided to do a short squeeze. There was no fundamental reason why the market react the way it did last night, because nobody expects such a violent reversal. So obviously the market was right for a short squeeze. The market was simply too short, and of course the release of the CPI numbers has given the market a very negative kind of sentiment, and that was a perfect moment when the market was actually squeezed higher. Those who have shorted upon the release of the CPI numbers were left holding the bag, and the market decided that you want to go higher. So that was a major technical reversal. If I see, this is of course the 60 minutes time frame. If you look at the daily time frame, you can see that yesterday's candle bar was very aggressive. It is a massive outside reversal. Okay, it took out the entire week's trading range, and it will appear that tonight is going to be a foregone conclusion. I think the market will close on the high side. On the weekly time frame, it will also create a massive reversal pattern. You can see this is a reversal pattern. Okay, so basically we can see that on the daily, on the 1 hour, we can see that market, especially on the daily time frame, this is a very bullish development. So technically speaking, what the fundamental is just as has not really improved, but the technical outlook has changed dramatically overnight. So just based on the technical outlook itself, there is a very good likelihood that going forward we may see this as a possible reversal point. Okay, I was expecting market to drift a lot lower. Okay, but apparently it did not happen yet. Okay, but that doesn't mean that it won't happen in the future, because the underlying fundamental remains pretty poor. Okay, but the market was right. Like I said, this market does not is highly unlikely, we have seen over the last 6 months, highly unlikely to collapse in the 90-degree waterfall kind of manner. It's more likely to be going down with a very aggressive rebound, for them going new low and then rebound, new low, rebound. So it's going to be a lockstep kind of decline over. If this is the case, it will last a lot longer. It means to say this bear trend that we are seeing is likely to last for a lot longer, rather than a very swift sell-off like what we saw at the beginning of the pandemic. Okay, that is in February of 2020. So this one is slightly different. Okay, so don't ask me why, but it looks over the last few months, since the beginning of the year, we can see the market has been falling, but we have intermittent rebound which are pretty aggressive. So this could be the start of another aggressive bear market rebound. Okay, so do watch out for this. On the S&P 500, it registered a new low at 3,491 last night, and then again there was a very similar reversal pattern seen on the daily time frame. This is a very bullish development. However, it is not as bullish as the Dow Jones. Now I just want to compare the two. Now I'm going back to the Dow Jones. You can see Dow Jones actually took out Monday's high, okay, whereas the S&P 500 is not. The Monday's high is over here, which is where we are, okay, is this level here, okay, which is 3,706. So last night trading range did not take out the Monday's high. That means to say that on a relative basis, between Dow Jones and S&P 500, the Dow definitely is a lot more bullish. And if you want to do anything, that means to show that the money is in the blue chips. If you step back and look at the entire global situation, we have this massive sell-off in the UK 2 weeks ago when they started to propose a tax cut. The market reaction was to sell off every British asset, including the gilt market, including the British pound, including the UK equities. Okay, so that caused the ripple effect in the whole credit market. Okay, so the market looking at the currency rate, if the British pound has been sold off so aggressively, so has the euro, so has the yen, all the major currencies have been falling. It means that investors are unlikely to hold on to asset price in those currencies. They are likely to shift their assets to the stronger currency. In this case, will be the dollar. So once the capital started to move to the States, it is not going to ideally sit in the bank to earn the interest rate. They are likely to move into risky assets such as equities. And this time, I think they are going to be very, very conservative. They're going to park their assets in only blue chips. So we can see that the Dow Jones has been very resilient despite the market went to a chaos for the last 2 weeks. So this could be the scenario in which most of the capital moving into the US are concentrated on the blue chip, which is the Dow Jones. So watch the Dow Jones this wrong, okay? So over in Nasdaq, we can see that the market has been coming off quite aggressively. In fact, we are at one stage here at 10,440. This market has year to date has dropped 34%. So this is a bit scary. From the end of December to last night's low, the market, the Nasdaq 100 had lost 30%, which is a little bit drastic to say the least. So you can see that the rebound last night, you can see that this is Monday's high. We are nowhere near the Monday's high. So this market is pretty weak. Okay, 11,272 was the Monday's high, and we are still a bit of a distance away from that price. Maybe tonight it will change the picture somewhat. Okay, but until then, we can see that the Nasdaq is the weakest, partly because of the Chip 4X that has gone into effect, because the Chip 4X actually penalized all semiconductors, okay, companies, whether you're in the design and manufacture or the OEM. So we can see that I said yesterday, major US semiconductor companies such as NVIDIA, AMD, Intel, they are all been sold off very aggressive. So yesterday there was another sell off purely because they are going to be restricted from selling anything to China. And China is a big buyer of semiconductors. So if they are not able to sell to China, who else are they going to sell to? Right now, unlike in the beginning of the Ukraine war, there was this massive shortages. Now we have surplus. And then add on to the Chip 4 restriction on selling to China, we're going to have a lot of inventory, which going to depress earnings going forward. So this is causing the tech stocks sector to be actually quite vulnerable right now. Okay, so this can be seen in the Nasdaq 100. So by and large, technically, we can see the US equity may have made an important reversal last night, and we want to see whether how far they can take this. Over in Hong Kong, we can see that the market reacted very positively to last night's reversal, but not in the manner that is in the same magnitude. Okay, Hong Kong traded a year's low yesterday to close near the bottom of the year's low at 16,389. This morning there was a rebound, but currently it is still trading below 17,000. The rebound relative to what happens in this in US equity overnight, it's not of the same magnitude. It is a little bit cautious. So basically, we will have to see whether Hang Seng have enough gumption to take prices a little bit higher. But I think the sentiment is pretty poor in Hong Kong, and that can be seen in the Hang Seng Index. Of course, the Shanghai Composite did not have this worry. Yesterday, we saw a unique move in the Shanghai Composite Index, while the rest of the Asian market was coming down aggressively, including the Nikkei, including the Hang Seng Index. The Shanghai Composite Index actually have a outside reversal day. This is a daily time frame. You can see the market yesterday was a new low at 2,935, which is registering the next lowest price of the year. The low was traded in April of this year at 2,863. So yesterday was 2,934. This is the second lowest price for the year, but it closes on a high note, resulting in a outside bullish reversal on the daily time frame. And this morning the market took off. Okay, so basically the market was rallying purely on the hope of a new stimulus from the central government, and today just so that the US equity has a major reversal, they took advantage of that, and market has been bought up again in the Shanghai Composite Index. Over in the currency market, we can see that the dollar actually managed to go to the high of 147.67. Now, this is a number that I have been mentioning for for quite some time now. 147.67 is the high traded in 1998. So for the market to stop going up beyond this number at 147.67 is actually no coincidence. The market actually was watching this level, and the market right now has been very cautious not to go beyond it, purely because I think 147.67 is a major high traded in 1998. Okay, we are seeing the yen at the 37-year low. Okay, so this is a bit drastic for a currency, for a major currency like the Japanese yen, and you can see that how strong the dollar is. But overall, we can say that the dollar is actually could be going into a technical retracement. This is the dollar index. Okay, dollar index registered a high of 114.78 on September 28, which is the almost the end of the last month. So since then, the dollar has been coming down. Yesterday, it again tried to challenge, but all it could do was 113.92, and the market closed back down. And again, this is a outside bearish bar. Okay, so it means the market could be due for a correction. Of course, this is today's this is yesterday's trading what we call that chart. Okay, so basically it is geared for lower prices. If this is the case, I think there's a case for for the dollar index to pull back all the way to 110. Okay, if the market pulls back to 110, it means generally all the dollar rates will come down relative to the other major currencies. We can already see that in the sterling. Sterling, despite its very negative sentiment right now, is holding pretty well. Last night it went up to a high of 113.80. Okay, if you look at the hourly time frame, you can see that the rebound was actually pretty sharp. You can see that the rebound continued to extend. I have been mentioning the rebound in sterling does not look complete. Again, let's revert back to the daily time frame. This is what I was saying. The rebound from 103.57 to 114.95, that is the first leg, but the market pulled back to the 50% at 109.23 just 2 days ago. You can see that the market now, on hindsight, looks like it is likely to extend higher. If this develops into a three-wave move, the market have a potential to move all the way to 120. 120.60 seems to be the target here, and if the market can do that, this will be areas that is going to be right for repositioning short. Okay, I think I'll be very interested to reposition my short. Currently, I have no position in currencies. I only have position in precious metals and energy, and I missed the yesterday's move in equity altogether because I was scratching my head what caused the sudden reversal in fortune for US equity. So I'm just going to watch it for one more day and see what I'm going to do going forward into the new week. Okay, so for sterling itself, if the dollar is going to start the technical retracement, it means all other currency rate is going to do the corresponding rebound. So that may give the sterling pound the impetus to actually extend higher beyond 170. 1.17 to maybe as high as 1.20, ideally into the 1.201 level. That will be the perfect level, because that will be my target level at 122. 122 will even be a much a better level for me to actually look to re-engage on the market on the downside. Okay. Still, Euro did not have a massive rebound, but again, if this is going to be a three-wave move, there is potential for the Euro to rebound higher to as much as 1.01. Okay, that means 1.01 will be the new target for this move here. This is an area corresponding to the previous high here at 1.1, almost to 1.02. Okay, 1.02 seems to be where the previous high is. So there's a very good chance if this develops into a three-wave rally, then this will be a good area to consider repositioning shorts. Over in the Aussie, we can see Aussie also have a reversal. This is a classic reversal pattern, what we call a hammer. If this extend higher, which it already has, then this could be a major reversal in the Aussie versus dollar. So technically speaking, this is actually a very bullish development for the Aussie versus the dollar, likely to go all the way higher to 65 cents from where we are right now. Currently, the market is now at 63 cents. Okay. Over in crude oil also have a reversal. You can see that the crude oil actually has a rally from $76.25 all the way to $93.64, pull back 50%, and then a little bit more. Yesterday we have a slightly marginal low when we can see that in the 60 minutes. This is a marginal low for yesterday. Okay, so $85.56, and then the reversal happened. So immediately the barrier to higher prices will be $90.36. So if you can close the week beyond this level, it is setting up for higher prices going to the new week. Okay. Precious metals. Take a look at the gold market. Gold market currently gold market, I also have long position. Unfortunately, I took up a long too early. This time last week, I was actually I had my first long position, and those positions are still in play. Definitely right now, you can look at the price has gone down quite a fair bit, go down by $70. So I've been holding on to this position for all this while. Hopefully, we can see a change of sentiment. Last night low was $1,641.90, and then this is of course referencing the spot market. Market right now is up at $1,668. Hopefully, we can go higher, but the immediate barrier to higher prices obviously is $1,683, almost $64. Sorry, $1,684. So this will be the immediate barrier in which the spot gold price need to cross over. If you can do that, it will be actually quite positive. But if it's not, then of course it will have to languish. But based on the fact that the dollar, if it goes into a technical pullback, that will be setting the stage for higher precious metal prices, because in a situation in which the dollar is very strong, precious metal, because it has no yield, okay, will definitely be negatively correlated. So when the dollar pulls back down, it's like a seesaw, right? Precious metal tends to be able to have better performance. So hopefully this is what we are seeing now. Dollar comes back down and precious metals started to go up. So this is hopefully the scenario that will unfold in the days forward. Silver, of course, is also having the same dynamics. It registered a low of $18.46 last night, and it rebounded. But technically, you can see the market need to cross beyond this immediate resistance line on the 60 minutes time frame. And if we can do that, the next barrier to cross will be $19.32. If we can do that by the end of this week's trading, I think it will be setting the stage for higher prices going forward. And it does looks positive because, like I say, the same dynamics that works for gold is also working for silver. Dollar comes down, precious metals goes up, and that includes silver. Okay, now let's take a look at the crypto space. Crypto have a massive rundown last night to 18,183 in the Bitcoin, and then the market reverses just as fast on the daily time frame. This is a major reversal. Okay, you can see last night's move here is a major reversal pattern. Okay, this is what I call a hammer, which the market at one stage was so bearish. okay, but it managed to pull back up. Not only it actually closed beyond the opening price yesterday and closed up northward of the closing price, resulting in a very positive hammer, and that is technically a very bullish development, and it will looks like we may have a situation in which all the crypto winter could be coming to an end. Okay, so technically speaking, it is what I see right now. Okay, whether it will end up to be that case, we will have to watch, but it does looks like the case right now. Okay, that means to say, if this is the case, crypto prices are, generally speaking, as a group, okay, likely to see higher prices going forward. Okay, the low may be in place last night. Okay, Ethereum actually has been very positive going into yesterday's trading. Remember, if you go back and listen to my commentary over the last few days, this week itself, I've been talking about the possibility of another one last flush in the Ethereum prices to take out the $1,200 range, going to as deep as $1,180, and that to me would be the flush before knocking out all the weak hands, and then market reverse. The market did better than that. It went out to $1,155 and then reverse. Okay, again, this is a major bullish signal. This is a hammer. Although the market did not close beyond the opening price, but still we can see that it leaves behind a very long tail here, and this is very positive going forward. Any kind of pullback, okay, it is right for a positioning of a long position, but the market needs to be able to clear the 1,400 levels convincingly. If it can clear above 1,400, then it set the stage for higher prices going forward. Ethereum especially, I am pretty bullish. Okay, Ripple also benefited from the very positive sentiment last night. Market also have a major reversal. This is a hammer as well. Again, the color wasn't ideal. Okay, it would have been better if it's a green color bar, but it ended up just as good because it left behind a very long tail at the bottom, and is setting the stage for higher prices. So this could be setting the stage for the market to take out the 55 cents level and go into at least at 58 cents, if not a 62 cent levels. Okay, so we can see that the high traded here, the barrier to beat, okay, the barrier to cross is 65 cents. Is it going to be able to do it? I think it can, because when the market right now seems to be going up, I think 65 cents would be a very logical target. Cardano also managed to do a reversal. The market, it was trading at an all-time low last night at a low price of 35 cents. This is a record low, and the market appears to have recovered. Also, if you look at the candle structure, this is also a reversal pattern, so it does looks good. Okay, and the immediate barrier is 39 cents. Let's see whether it can cross back above 39 cents, and then generally I think it should also benefit from the general stable prices going forward. Atom, which is the Cosmos coin, also have a reversal pattern. So across all the crypto space, all the coins appear to have the same similar candle structure. Okay, meaning to say that technically speaking, they are all building a base to propel this market generally higher. Avalanche, same thing. Avalanche have a reversal. If you look at the daily time frame, it will have to, I think it's going to be operating within two parameters here. One, of course, is this lower internal structure, which is the resistance line. Market broke above. You can see the market has been resting on it before it propelled higher. So this line here is of significance because the price has reacted along this line. So this line here, the immediate previous resistance now has turned support, will be the area of support going forward. And then over here we have a higher time frame, not higher time frame, external barrier. Okay, this will be the resistance, this will be the new support. So between these two space here, I think this is where the market is likely to be trading. If it can break above the upper resistance, it is going to fly. Okay, so do watch out for the developing situation now developing in the crypto space. Like I say, there's a very good chance the long winter in crypto could have seen a major low last night. Okay, so going forward, it's all going to be good. Okay, right. Okay, I think this is all that I will do for today. Now, for Sunday, just do remember that I have my regular market rep. Do register for the event if you are interested. And I have to repeat, only those who register for the event, upon request can get a recording of the session. For those who do not register, I'm so sorry, I can't give you the recording. So okay, that is the basic ground rule. Anyway, I'd like to wish you all a happy weekend and stay safe. Bye bye.